In this free video course, you will learn everything you need to know about swing trading, whether you are trading crypto, forex, stocks, or any other market. This course is designed to take you from being a swing trading beginner to an advanced trader. Alright guys, so let's begin this course by very quickly going over what you can expect to learn from this video. And the very first thing we have to, of course, talk about is some swing trading basics. Because if you want to become a successful swing trader, the very first thing we need to do is, of course, to learn about the basics. So we will talk about things such as, for example, what is swing trading in the first place. We will talk about why would you want to swing trade? What is the benefits of swing trading instead of, for example, day trading or scalping and so on and so on. And this chapter right here is a very important foundation for the rest of the course. But okay, so the next chapter, we are going to talk about some of the best swing trading platforms, because in general, in order to swing trade, we need two types of platforms. We need one platform where we do our analysis, right? So this is where we plan our trades. This is where we plan when to buy and when to sell, whether it's a stock, cryptocurrency, or forex. But we also, of course, need to have a platform where we actually trade, where we actually buy and sell. So in general, we actually need two platforms, but on some platforms, you can actually both do your analysis and trade at the same platform. And we will talk about that later on in this course. But both of these chapters, very important foundational chapters here for the course. After we're done with chapter 1 and 2, we are ready to move on to candlestick chart reading. Candlestick charts are the main charts that pretty much all traders do, and in this chapter we'll talk about the very basics of how to understand and how to analyze candlestick charts. So this chapter is very important if you are completely new to trading and swing trading, but we will also dive a little bit deeper into some more advanced techniques. So even if you know what a candlestick chart is, this is still a chapter you can get value from. But now we are finally, after chapter 3, we are finally ready to take a look at the art of trend following. And this right here, chapter 4, is, in my opinion, one of the most important chapters of the whole course. Because when we swing trade, our goal as swing traders, let me actually draw here, is to basically catch the swings of the market, as we can hear on the name. So we will talk more about this later, but the sort of foundation here of swing trading is that we want to trade in the same direction as the trend. So in order to trade in the same direction as the trend, we of course need to have some specific rules that we can apply to know whether we are in an uptrend or whether we are in a downtrend, or perhaps we are in a sideways market. Most of swing trading strategies comes from following the trend. You also have a few strategies that can be used in trading ranges, or in other words, sideways markets as well. But chapter 4 here is some real good stuff. But now then, after chapter 4, we are going to talk about the chapter that I know that a lot of you guys will like. We'll talk about the best swing trading indicators, and I will also show you guys some special settings that you can follow in a step-by-step manner to actually potentially improve the indicators even further. So if you are going to take swing trading really serious and want to have some of the best swing trading indicators, this chapter is a must. But I would say this chapter is definitely a bit more advanced. So if you are a beginner, just make sure to watch all the previous chapters before you watch this chapter. I have actually built this course in a step-by-step manner. So in order to fully understand one chapter, you definitely preferably need to watch the previous chapters. So if you want to take swing trading serious, guys, please make sure to watch the chapters here in order. And last, guys, but definitely not least, this is arguably, the most important chapter here, is where we take a look at some real world swing trading examples. So this is the chapter where I will show you guys real charts and how we can trade the real charts step by step. But all right, so now then, the very first question we of course need to ask ourselves is, what is swing trading? And in very simple terms, the definition of swing trading goes like this. Swing trading is a trading style where positions, so this can be, either buy or sell positions, where positions are held for around 2 days to a few weeks. So when you are planning to trade for 2 days to a few weeks, this is what is known as swing trading. Because if we have shorter than 2 days, if you trade within the day, that is called day trading. And if you trade for longer, it's called investing. So this is what you can read right here. How is swing trading different from other trading forms? Well, as I just said, it's longer term than day trading. Day trading is when you trade within the same day, but it's shorter term than investing. In general, we say that investing, I would say, is when you hold for at least a month, or for most investors you will hold for years, but at the very least a month. Swing trading can be holding for even months, but that is sort of I would say that is where I draw the line between swing trading and investing. It's not a perfect line here, but I hope you get the main points. But now, what about the goal? What is the main goal for all swing traders? Well, our goal is to profit from something called price swings. And this is basically medium-term price movements. And this is what I try to show with this image right here. You can see a swing trader. This is like a perfect example of a swing trader. You buy here at the low of a swing and you sell here at the high. You buy at another low of a swing and you sell at the high. Will you as a swing trader always be able to buy at the very low and sell at the very high? Well, you will not. But the goal as a swing traders is to be right most of the time and over a large amount of trades make money. But now then, how does this work? How can swing traders find high probability and good trading opportunities to make money? Well, swing traders use a wide variety of tools. They use technical indicators. They use a concept called market structure. This is very, very important, and we will talk quite a bit about it in this video. And they also use something called price action. And guys, if you want to learn more about market structure and price action, I actually have courses on both market structure and price action here on the channel. So make sure to check the courses out after this video if you want to dive deeper. But we use all of these tools to basically make informed trading decisions. So this is how swing trading works. And here I actually forgot to mention one last important thing that I know I will get many questions about if I don't answer. So here I talk about that swing trading is when you hold for around 2 days to a few weeks. So now you might wonder, what are the time frames we should trade on? Well, there's not a perfect answer here, but I would say using 1 hour candles to all the way up to maybe daily candles. This is the most common time frames for swing traders. But some swing traders, I mean, you could maybe use 30-minute candles, and in some extreme cases, maybe you can even use weekly candles. But I wouldn't say that really applies to swing trading. When you use weekly candles, then we are talking more about the investing category. But alright guys, so now let's talk about something super important, and that is why swing trading is the best trading style for beginners. And before you jump into the comments and say, no, you're wrong, day trading is better, or, no, you're wrong, scalping is better, and so on and so on. Yes, guys, this is just my opinion. Maybe if you are a successful day trader, or if you're scalping successfully, then all credits to you. This is just my opinion, and in this chapter, I will talk about why I think swing trading is the best trading style for beginners. And the first point I want to talk about is that swing trading gives you more time to think and plan your trades. And this is especially important when you are new to trading, because you will not be able to see maybe trading opportunities that maybe I or other traders will see right away by just looking at a chart. As a beginner, you will of course need more time to see these opportunities. So as you can see, like here, unlike day trading, swing trading gives you more time to analyze charts. It gives you more time to analyze strategies and market trends without the pressure of instant decisions. And this is a factor I don't really hear talk about a lot. The most hyped up things on, for example, educational platforms like YouTube, other places, is of course, pretty much always day trading. People want to make quick money, making money right away. But in my opinion, swing trading is actually a better opportunity for most beginners. And another thing that makes that one could argue that makes swing trading a bit better than investing, if you plan to, at least be active in the market, is that it gives you faster feedback than investing. So even though swing trading is longer term than day trading, you will still get a lot of feedback. So in just a few days, or in some cases a few weeks, you will get feedback on your trade, and feedback is very important to be able to continue to develop your trading strategies. So as you can see right here, you will learn and adapt quickly as trades last days or weeks, and not months or years compared to, for example, long-term investing. So I like that swing trading is a pretty good middle ground between the very short-term day trading and the very long-term investing, where you have both a lot of time to think, but you also get a lot of feedback. I hope, guys, that this is making sense. If you have any questions right now or during the rest of the course, make sure to drop them down in the comments. I try my very best to answer as many comments as possible. All right, and the next point I want to talk about here is that swing trading has a balanced pace. And what do I mean by this? Well, it's ideal for beginners who want to improve their skills, right, without having to be glued to the screen all day. So if you day trade, you will need to spend much more of your day in front of the screen. While if you are swing trading, maybe you only need to spend, maybe 30 minutes or an hour in the morning, and maybe 30 minutes or an hour in the evening, just quickly checking your trades. You don't even need to trade every day. You might just take a few trades in a week. So this also makes it a much more realistic commitment to most people. Most people have a job, you might have a 9-to-5 job, so you don't have time to, sit in front of the chart the whole day. So this makes it so that swing trading actually fits into most lifestyles. It's perfect for those who want to balancing trading with other responsibilities. It can be work, family, other hobbies as well. It works very good. All right, so before we continue here, I want to give a big shout out to all our new channel members. You guys are making these videos possible. I spend a lot of time and effort on these videos, so if you want to give back while at the same time getting access to exclusive content, please consider becoming a channel member by clicking join below this video or on the channel page. Now let's jump back into the course. But alright, so now then, a question many of you guys are probably having is, what is the best markets to swing trade? Should I focus on crypto? Should I maybe focus on Forex? or maybe a commodity like gold or oil and so on and so on. What is the best market here? Well, let's take a look at the markets one by one. And let's begin here with stocks. What do I think about stocks? Well, the stock market, in my opinion, is ideal for beginners. In the stock market, we usually have pretty clear trends. We have high liquidity, especially if you focus on large cap. So you focus on the big stocks. And the stock market also have usually good and clear information, especially if you're trading, well-known stock markets like the US. I'm from Sweden. The Swedish stock market is also, getting access to information is really easy. So stocks are a very good market for beginners. But what about Forex, which stands for foreign exchange trading? Well, one good thing about the Forex market is that it's open 24/5. So it's open both during the day and the night, but it closes on weekends. If you compare this to stocks, the stock markets are usually only open when people are working, so around 9 to 5. It will differ a bit depending on the country, but stocks are closed during the night. So that makes the Forex market a bit better if you like to be able to trade whenever you want and you want markets to be open pretty much all the time. However, the Forex market is only available 24/5, but the crypto market is always open. We're talking about 24/7. So if you want to be able to trade any time of the day, any time of the week, then cryptocurrency might be for you. However, one thing you need to have in mind about cryptocurrency is that they tend to have very high volatility. So cryptocurrencies have potential to move very fast to the upside, but they also have high risk to fall very fast to the downside. So I would say that cryptocurrency is a high risk, high reward market. High risk, high reward. You will have opportunity to earn a lot, but you will also, if you're not good, you have high risk to lose a lot. So because of the high volatility, the cryptocurrency market is perfect for those who are comfortable with rapid price swings. So in general, the cryptocurrency market is a bit more advanced compared to, for example, the stock market. I would say that the stock market is a little bit easier, but if you are a good trader, you can definitely make a lot of money in the crypto market. So definitely have that in mind. Last but not least, I also want to mention commodities. So these are things like gold, silver, oil, even coffee beans and something like that. As I said, you can trade gold, silver, oil, and other raw materials with distinct seasonal trends. So that is a thing with commodities that you can actually take advantage of. Commodities are, like all things, heavily affected by the real world. Of course, everything is affected by the real world, but for some of these other markets like cryptocurrency, it might be more psychology that is affecting the market compared to, for example, commodities. So that is one thing to have in mind when you trade commodities. And these kind of markets will also depend a lot on what you're trading. For example, gold tend to be very stable, while, for example, silver tend to be more volatile. So if you're planning to trade commodities, I would recommend to actually research the market you're going to trade quite a bit and get familiar with your market's price movements. And this right here is pretty much just repetition of what I just said. The commodities markets are often influenced by macroeconomic and geopolitical events. And macroeconomics you can basically think about as the big picture of the economy. So these are very sort of broad measures like inflation, rates, and so on and so on. And geopolitical events, I would say, are basically sort of large events that affects whole countries and the relationship between countries and so on and so on. It can often be, think about things like oil, who has the rights and so on and so on. It's basically big political events that happens between countries. But all right, so far you know what swing trading is, you know why swing trading is a good trading style for beginners, and you also have a basic understanding of the markets we can swing trade and make money. But what does swing actually mean? Well, let's take a quick moment and talk about this. So the definition of swing, it can be pretty hard to find a definition online, but I would define it as this. Swing in swing trading basically refers to a market's natural price movements between highs and lows. And this can be better understood by looking at a chart. So if you all focus on this chart right here, we can actually see three sort of swings on the chart. So you can see from this low to this high, the market makes a swing. Then the market drops back here, we create another low, and we swing back up all the way here. We pull back once again, create a low, and finally we swing all the way up here. So basically think about swings as these sort of waves in the market. And if you're now asking yourself the question, what about this move right here, or this little swing right here? Isn't this also a swing? Well, that is a great question, and that is something we will talk about later on in this course when we talk about market structure. Later on in this course, when we talk about market structure, you will actually learn about some specific rules we can use to identify, is it likely that we are in one of these swings right now? And is it likely that we are in an uptrend or a downtrend? So definitely, guys, stay tuned for that. But now then, why does it matter what a swing even is? Well, it matters because the goal of swing traders is to capture these movements and profit from them. This is how swing traders make money. But now then, in order to be a successful swing trader, you of course need to have the right tools and platforms. So now let's talk about the best swing trading platforms. And before we can dive in and talk about the specific platforms here, you first need to know that in order to swing trade, you need two types of platforms. And the very first type of platform you need is an analysis platform. And this right here is the platform where you plan your trades using charts, indicators, and other technical tools. So this is the platform where you create your trading strategy and where you find buy and sell opportunities. And when you have found exactly when to buy and exactly when to sell, then you of course also need a platform where you actually execute your trades. And this we can call, a broker platform or just a broker. But this is basically, as I said, the platform where you execute your trades by placing buy and sell orders. And some platforms actually combines these two together. So on some platforms you can do your analysis and you can buy and sell. But if you want to have the best platforms, many times it can be better to use a specialized platform for analysis and a specialized platform to place your buy and sell orders. Alright guys, so the very first platform I want to talk about is called TradingView. This right here is my personal favorite analysis platform of all time. It basically has everything you need to do your analysis. It doesn't matter if you trade crypto, forex, or stocks. TradingView is the way to go. And it also has both a paid version, but it has a great free version as well. So for both beginners and advanced traders, I highly recommend TradingView. And no guys, I'm not sponsored by TradingView. I do have an official TradingView hoodie right here, but I'm not sponsored. I'm saying this genuinely because TradingView is, it pretty much has everything you need. So Why get TradingView? Well, as I said, in my opinion, TradingView is the only platform you need for swing trading analysis. It has pretty much everything you need. Well, the free version is a bit restricted, but it's still a good way to start. And I don't know about any other platform that has a better free version. So even if you want to go for the free version, TradingView is good. But what do you get when you sign up for TradingView? Well, first of all, you will get access to pretty much all major markets. You can find pretty much all stocks, pretty much all cryptocurrencies, pretty much all forex pairs. It has access to, pretty much all markets you can ever wish for. And also, it has over 500 plus pre-built drawing tools and indicators. So these are technical analysis tools you as a trader can use to find buy and sell opportunities. And even more impressively, TradingView has more than 100,000 community built indicators. So this is one sort of good thing about getting TradingView. It has such a big community already. So by joining TradingView, you can take advantage and learn from other traders, and you can use other traders' indicators and so on and so on. And also, TradingView is the platform I will be using throughout the rest of the course, and it is the platform I use for my whole YouTube channel. I pretty much use TradingView in every single video. But you also get other things. This is just a few examples. You get price alerts, backtesting tools, and so much more. I simply can't list everything about TradingView here. And this is important. It has, as I said, it has both free and premium options. And in my opinion, the free version, as you can see here, TradingView has an excellent free version. In my opinion, the free version is really solid. And you also have the ability to upgrade if you really want to take trading seriously. So what I usually recommend, if you're a complete beginner, go for the free version. But when you are ready to start taking trading really seriously, then I highly recommend to upgrade your plan. And here for TradingView, I actually have a special offer. So when you sign up, make sure to sign up using my link. It will be both in the description and the top comment. And the reason you want to use the link is that you will get a $15 bonus if you decide to upgrade your TradingView plan. So you can use my link and go for the free version, but then if you later on decide that you want to upgrade to a premium plan, you will get $15 bonus. So make sure, guys, to use the link down below. You will at the same time help out the channel. So I appreciate all of you guys using that link to sign up. Alright guys, so now it's time to take a look at a platform called InvestingPro. And this platform right here is yet another analysis platform. But this platform, I would say, are more focused on long-term swing trading and even investing. But you guys might of course ask yourself, why InvestingPro? Well, InvestingPro is a platform for traders that don't have a lot of time and want other experts, but also artificial intelligence to actually do the job for you. So this is a platform when you can get pre-made analysis and portfolios on when to buy and when to sell stocks. So what does InvestingPro actually offer here? Well, the first thing it offers is access to advanced AI trading strategies. And here, some of these strategies offer up to 2,000% in profit. And if you guys want to learn more about this, I actually have a video that I will make sure to link up in the corner of this video that you can watch if you want to learn more about the AI trading strategies inside InvestingPro. But also another very nice features is that you can get insights and exact analysis into other smart money portfolios. So you can look at, for example, what is Ray Dalio trading right now. You can look at what is Warren Buffett trading and holding, Bill Gates, and so on and so on. They have an amazing feature where you can search for other traders' strategies and portfolios, and if you want to, you can simply copy and paste that into your own portfolio, and that way trade like the smart money. But guys, here Investing Pro is unfortunately, like TradingView, it's not free, but I have actually managed here to get a special link. The link will be here in the description and the top comment, and you can actually get up to 54% off on your subscription. And in some cases, you can actually get up to 70% off. I know that right now you can get 70% off, but I'm not sure how long this offer will last. So make sure to check the link down below if it's 54% off, or if you can still get 70% off of your Investing Pro. I also plan to make more videos on Investing Pro in the future, so definitely guys stay tuned for that. But yeah, to summarize, if you want a chill platform where most of the analysis is already done for you, you can check out Investing Pro. But remember, this is more for longer term swing trading and investing trading strategies. But alright, so now let's actually take a moment and take a look at some crypto trading platforms, because I know that a lot of you guys are trading crypto. So if you don't know which platform to choose, or what is the best crypto trading platform, this one is definitely interesting for you guys. And here I have two main suggestions. The first suggestion I have is Bybit. This exchange right here is probably the best exchange if you want to get free bonus when you trade. If you use my link that will be in the description, it will be in the top comment, you can actually get up to $30,000 in bonus. I know that sounds too good to be true, but as you guys can see, by using this link right here, you can indeed get up to $30,000, but it starts here with $50, and the more you trade, the more dollars you will get. So make sure to check out the requirements, but it's up to 30,000. And another good thing about Bybit is that the last time I checked, Bybit is currently the second largest crypto exchange by trading volume. This was when I checked just recently here in December 2024, so it might have changed a bit depending on when you watch this video, but it is one of the larger crypto exchanges, so definitely check out Bybit. And also Bybit has access to tons of coins. In total you can find around 700 different coins on Bybit, so definitely a great option. But now the next option I want to talk about is called Binance. This if you are in the crypto space, you have probably heard about Binance. The reason I'm recommend Binance here is because it's simply the largest crypto trading platform in the world. It's a very large exchange, very trusted exchange also. So if you want a very safe alternative, you can definitely check out Binance. And once again, for Binance, I have also managed to get a special link. As always, the link will be both in the top comment and the description. And by using that link, you will get 10% off on all your trading fees. One factor that can definitely affect your profit is the fees you have to pay every time you buy and sell cryptocurrency. So getting 10% off in the long run will definitely help you make more money. And what about the access to coins? Well, Binance has, just like Bybit, access to many coins. Not as many. We have a total of around 450 coins. But 450 coins is still a lot, guys. You will have tons of different charts to scan and analyze. So both of these alternatives are good in my opinion. But alright, so at this point in the course, you know what swing trading is, you know why and how we as swing traders make money. You also know about the platforms you need to use in order to dive right in and start swing trading. So now it's finally time to start taking a look at how to actually analyze charts. And the very first thing we need to learn is how to analyze a candlestick chart. This right here, what you can see on the screen, is an example of a candlestick chart. To be specific, we're actually looking at a Bitcoin chart, which you can see right here, BTC, which you can see, BTC is the ticker symbol for Bitcoin, and the time frame we're looking at is a daily time frame. What do I mean by daily time frame? Well, that means that every single candlestick you can see here on the chart represents one day. But how do we actually read and understand these candles? Well, the first thing we need to understand is that we have two different kinds of candles. We have a red candle, also known as a bearish candle, which you can see right here, and we have a green candle, also known as a bullish candle. And a green candle is simply put when the price went up during that period. And the period can be, as we're looking at right now, it can be a daily time frame, but we can also, for example, look at a 1 hour time frame. If this right here was a 1 hour time frame, that would mean that every single candlestick on this chart would represent 1 hour instead of 1 day. But for now, let's just think about that every single candle is 1 day. So for a green candle on a daily time frame, the price starts right here. This is the open, or in other words, where the price was when the day started. And then when the day ended, the price was all the way up here at the close. So during the day, the price moves from the open to the close, but you can also see that we have a highest point all the way up here and a lowest point all the way down here. What this basically means is that, let's visualize the price. We know that the day started right here. During the day, the price went all the way down to the lowest point down here. That was the low. And during the day, then the price went all the way up here to the highest point. This was the highest point the price reached during the day, but before the day was over, the price went down to this point right here. So this is how the price could have moved during this green candle. I hope it makes sense. Now, the exact same thing, but the opposite is true. The opposite is true for the red candle. For the red candle or the bearish candle, the price started up here, and during the candle, or in other words, during the day, the price pushed down all the way down to this point. But the lowest point of the day was all the way down here, and the highest point of the day was all the way up here. So this is the exact same thing, but the opposite of the green candle. Another thing that is important to learn is just some terminology. So first of all, the wide part of the candles, so the green part right here and the red part right here, is known as the body. We call these candlestick bodies. And the parts here that are above and below the candles, so the small lines right here, down here, and up here, are known as either wicks or shadows. The most common terminology is wick, but some traders will call them shadows. I think shadow is a more old term for the wicks here, but I would recommend to use the word wick. So let's just take a look at a random candle on this chart. We might want to look at, for example, this green candle right here. How did the price move during this candle? Well, we know it's a green candle, so the price moved up during the candle. And we also know that it started right here. So right here was the open. And when the day was over, the price was up here at the close. But we can also see that the price actually reached a highest point all the way up here. So this right here was the high during the day. And the low, you can barely see it, but the low was just a little bit below the open. So during this day, the price pretty much started to go up and it never looked back. But alright guys, now when we know how to read and analyze individual candles, now it's time to take a look at the bigger picture and how to analyze multiple candles together. Alright, so now it's time to take a look at something very important when it comes to swing trading, and that is the art of trend following. Because in order to swing trade correctly, the by far most common method is to try to trade in the same direction as the trend. And in order to do this, we of course need to know what a trend even is. We need to know how to identify a trend, and we need to know the different states a market can be in. So let's take some time now and learn about trends and trend following. And the very first thing we need to learn about is that the market can be in 3 different states. The first state a market can be in is to be in an uptrend. And how do we know that a market is in an uptrend? Well, the sort of very basic rules here is that in order to have an uptrend, we need to have both higher highs, or for short, we usually write this as HH, but we also need to have higher lows. So if you guys take a look at the green part here of this image, you can see that it looks like we have an uptrend, right? But why is this an uptrend? Well, here we have a low, here we have a higher low, and here we have yet another higher low. At the same time, we also have a high, we have a higher high, and then we have a higher high. And here we actually have another higher high. So on this image, I realized that I actually made a mistake here. This part should also be green. Why should that part also be green? Well, as long as we're printing higher highs and higher lows, we are in an uptrend. So during this whole green part right here, we are in an uptrend because we're printing higher highs and higher lows. The other state a market can be in is a downtrend. A downtrend is just the opposite of an uptrend. This is when we're printing consecutive lower lows, right? So we have a low, we have a lower low, and then we have yet another lower low, but we also need to print consecutive lower highs. So we have a high, lower high, lower high. When we have lower lows and lower highs, we have a downtrend. And if you think this sounds too simplistic, you are right, because we later on in this course, we will take a look at some specific rules that you can follow to find uptrends and downtrends. But for now, all you need to know is that, in an uptrend, higher highs, higher lows. In a downtrend, lower highs and lower lows. But we also have a third state here. We can also have a sideways market. And a sideways market is like a broad term for all states that are not an uptrend or a downtrend. So this black part right here could be an example of a sideways market. Here you can see it looks like we have like a trading range where the price is confined between a resistance level and a support level. But another type of sideways market could be something that looks maybe more something like this. You can see if we have a market where we are printing, both lower highs and higher lows at the same time, you can see that this is neither an uptrend or a downtrend. This is some kind of sideways market, but a different kind of sideways market. This right here actually looks like a triangle, and we have a name for this. This is what is known as a symmetrical triangle, and some traders actually use this as a trading strategy. We could, also have the opposite of this. So we could have some sort of market that gets maybe wider and wider, like the opposite of a triangle. And there are many variations of sideways markets. But for now, all you need to know is that we have uptrend, downtrend, and sideways market. Now, guys, it's finally time to dive deeper and take a look at some specific rules we can use to find uptrends and downtrends. Alright guys, so now it's finally time to take a look at 2 important concepts that you can use to identify uptrends, downtrends, and even sideways markets. And these concepts are known as change of character, or for short, CHOCH, and break of structure, or for short, BOS. If you can learn these two concepts, that's a very great start in understanding trends and understanding market structure. And let's actually begin here by taking a look at the break of structure. What is a break of structure? Well, a break of structure is when the price breaks to a higher high in an uptrend or breaks to a lower low in a downtrend. So if you guys look at this image right here, where are the break of structures? Well, if we take a look right here, you can see that when the price breaks above this point right here, we actually break to a new high in an uptrend, right? So this right here is a break of structure, or for short BOS. Once again, if we take a look at the next break, we can see that we have yet another break right here when the price breaks to a new high in an uptrend. So this right here is yet another break of structure. But what about here? You can see that here the price went up, created a new high, but then the price started to fall. And what we also can notice is that the price actually fell all the way below this point right here. And this point is a very important point because that is the point that started the move that caused the break of structure. This is what is actually called a strong low. A move that causes a break of structure is called a strong low. And when we break this strong low, this is actually what is known. You can see the break happened right here. And this is what is known as a change of character. And here, as with many things in trading, some traders might use slightly different terms and definitions or slightly different rules here for identifying break of structure and change of character. But this is exactly my rules for finding break of structure and change of character. So we have 2 break of structures. Here we have a change of character. But what about this move right here? What about this break? Well, remember what a break of structure is. It is when we break to a new high in an uptrend or when we break to a new low in a downtrend. So this right here is actually yet another break of structure. What about this next move? Hopefully by now you are starting to see the pattern. Here we once again break to a new low in a downtrend. So this right here is yet another break of structure. But now guys, it gets a little bit tricky. What about this next move? You can see the price went down here and then we went up to this point. But is this a change of character or not? Remember that a strong low was created from a move that caused a break of structure. So this should mean that a strong high comes from a move that causes a break of structure to the other direction. So this right here is a strong high. And what you can see here, and what is very interesting, is that this strong high is not broken until all the way up here. So it's not until this point that I consider this a change of character, right? But here, and this is very important, we need to notice here that this is just looking at a price at one time frame. Maybe right now we're looking at a daily time frame, but if we zoom in here and perhaps take a look at the 1 hour time frame, we will actually see that we will have multiple of these break of structures and change of characters inside every move. So for example, this move right here, where we can see the break, so you can see we have a break right here, this will most likely be a valid break of structure here in a sort of uptrend when we zoom in to the lower time frame, and so on and so on. So we can definitely dive deeper than this, but it's a little bit outside the scope of this video. But guys, if you want to learn more about this framework, I actually have a full course here on the channel about market structure. And I will make sure to link that video somewhere up in the corner. So make sure to check out that course after you're done with this one. Alright, so now guys, the time has finally come to take a look at the chapter that I think many of you guys will really like. This is where we take a look at some of the best swing trading indicators out there. And for this whole chapter, I will be using TradingView. So make sure that you are signed up for TradingView before you dive into this chapter. Remember, I do have a link down below that you can use. But all right, so the very first indicator I want to show you guys is a special version of the MACD called the 3-10-16 MACD. And if you don't know, the MACD indicator, or the moving average convergence divergence indicator, is an indicator that measures momentum. And momentum is basically the speed and velocity of the price. So for example, if we have a move that maybe goes like this, it's not very strong, we don't really have too much momentum. But if you see a movement that goes more, you see a movement like this that goes up maybe like that, and then you see another movement like this, both of these parts right here have lots of momentum or strong momentum. And this is how we use the MACD. We want to find these momentum moves, because many times after a strong momentum move, the price tends to pull back here, which is when the price goes in the opposite direction of the move before the next strong impulse to the upside. And don't worry guys, I will show you guys exactly step by step how we can use this special version of the MACD. But for now, all you need to know that this is a custom MACD setting that is optimized for swing trading. You can also use it for day trading, but it's used to find these momentum shifts. Next guys, I want to show you guys one of my favorite indicators right now. This is the pivot point highs and lows, and I think that this is a very good indicator to get in some objectivity into your analysis. As you guys probably know by now, technical analysis actually involves lots of subjectivity. Some traders will consider, one level a resistance level, while other traders will consider that level is not a valid resistance or support or blah, blah, blah. There are definitely subjectivity involved, but by using this indicator, we can get some key levels on the chart that are objectively chosen. And I will also show you guys the settings you can use for this indicator. Last but not least, another very good indicator is the volume. The volume indicator helps you determine how strong a move is by showing the number of stocks, crypto, or even Forex units traded. Measuring the volume of Forex is much more complicated than measuring it for stocks and crypto. So if you're trading Forex, you might not want to use volume, or at least you have to read a little bit more about it. But volume is very straightforward and simple for stocks and cryptocurrency. When it comes to stocks, volume is the amounts of stocks that changed hands during that period. And when it comes to crypto, it's about the amounts of crypto, for example, Bitcoin, Ethereum, or whatever you are trading. But now guys, let's take a look at all of these indicators one by one and step by step. Alright guys, so now we have jumped in to TradingView, and now we're ready to open up our first indicator. To do this, we want to go up here to the Indicators tab in TradingView, and what we want to search for here is simply MACD. And as you can see here, we have tons of different MACD indicators created by the community. I talked about this earlier, that TradingView is amazing because we have so many traders working on creating custom indicators. But for this one, we're just going to use the simple indicator called moving average convergence divergence. So let's open this one up. However, now we need to change a few settings. To change the settings of the MACD, what you want to do here is to go down here where you can see this settings button right here. So you click this one. Alright guys, so now we need to change quite a few settings, so make sure to really pay attention. First of all, we have the fast length with the standard setting of 12, and we have the slow length with a standard setting of 26. And the MACD used the fast and slow length to create the MACD line. Or in other words, to be more precise, it takes the fast length minus the slow length. So the normal is 12 minus 26. But for this, we want to change the fast length to 3 and the slow length to 10. The source here you can keep at close for now, but what you do want to do is that you want to change the signal smoothing to 16. The signal line or the signal smoothing is actually a moving average of the MACD line itself. And I know, guys, if this sounds complicated, don't worry. I do have a full MACD indicator course here on the channel. I highly recommend this one, and I will make sure to link the course somewhere up in the corner. Definitely watch that video after this course. But the signal smoothing is a moving average of the MACD line, and you want to have that one on 16. The last thing we want to do here is that we actually want to change the oscillator moving average type to an SMA instead of EMA. So we want to have SMA there. We also want to have the signal line as an SMA. And for the style tab, we actually want to uncheck the histogram and uncheck the signal line. So now we will only be using the MACD line for our analysis. When you have done all of this, we are ready to go down here and press OK. So now, or actually we can do one more thing. I'm just gonna make the line here a bit thicker so you can see it more clearly. That's the last thing, I promise you guys, that's the last thing I will do. So now we're ready to press OK. But alright, so right now we're looking at a daily time frame because we're swing trading, and we're currently looking at a forex chart. We're looking at the euro CAD, or in other words, we're looking at the euro measured in the Canadian US dollar. But now let's take a look at how we can use the MACD in our analysis. And remember what I recently talked about. The MACD measures momentum. So when we see sharp and strong movements, like for example right here, this will lead to sharp and strong readings on the MACD. And specifically, you can see that we get low values on the MACD when we see sharp movements to the downside, and when we see sharp movements to the upside, this will lead to high values on the MACD. But how can we use this information to trade? Well, one thing I'm looking out for is that when the MACD creates a low that is much lower compared to the previous low, so we have a low right here, we have many previous low, and you can see that this low is much lower compared to the previous lows. This is a move you need to pay attention to, because after these momentum moves, we can actually look out for pullbacks, and a pullback is a move in the opposite direction. So for example, right here, we have a pullback, and these pullbacks are actually one of the most common trading strategies for traders to actually find entry points. So one trading strategy right here could actually be to try to short this pullback. Short basically means that you make money from the price going down. So this right here was actually a pretty solid shorting opportunity. But let's actually continue our analysis. What about, for example, this move right here? Well, here we can see that this move actually created a high that was much higher compared to the previous high. So this is yet another momentum move, which means that we could actually look out for this pullback as a potential opportunity to go long, right? So here we actually had two sort of trading opportunities, one to go short and one to go long. Another thing I do want to notice about this chart is that here you can see that the price printed a low right here, and here we had the very deep low, but then we printed a lower low while the MACD printed a higher low. So here we had the price going in one direction, we had the MACD going in the opposite direction. This right here is what we call a bullish divergence, and this is actually a reversal signal indicating a reversal here to the upside. This doesn't mean that every bullish divergence will lead to a move towards the upside, but one thing you can definitely consider from this divergence is that the next pullback here in the downtrend might be something you want to avoid if you are trying to short, right? Shorting when you see a bullish divergence sounds like a recipe for disaster. But alright, so now the time has come to take a look at our second indicator. And to open this indicator up, we once again want to head up here to the indicators tab in TradingView. And now we want to search for pivot point and then high low like this, or pivot points. Yeah, pivot points, high, low. And the indicator we want to open up right here is this one at the top called pivot points, high and low. So let's open this one up. But all right, so now, as you can see here, multiple points here have appeared on the chart. One thing we can notice is that the very low here was marked by the pivot points. But before we can use this indicator, we actually need to change a few settings once again. To change the settings now, we actually need to go up here to the upper left corner, and we want to press on the settings button right here. Then we head up to, or we head over to the inputs tab. And here you can see that we have, it says pivot high and then 1010, and it says pivot low 1010. And this is basically the period the pivot points will be calculated on. So what I like to do here is that I like to make the pivot points even more significant. And we can do that by changing the length of the pivot high to 2020 and change the length of the pivot low to 2020. Yet another thing I like to do to make the pivot points just more clearly here on a white chart is changing this box to white, and I change the next box to black. Now the pivot points will be clearly visible on the chart. So now we are ready to go down here and press OK. And as you guys can see, now you can see multiple pivots here on the chart. But what are these points and why can they actually be useful? Well, one thing we can see on this Forex chart right here is that it looks like we have multiple pivot points around the same level right here, and we also have multiple pivot points right here. When we see multiple pivot points at the same level, this often suggests that we have a strong resistance or a strong support. So these can be levels that are definitely worth paying attention to. So let's actually mark up these levels on our chart. We go here to the horizontal line, we mark up these levels. And as you can see, it looks like these levels was very important price levels, because together these levels actually created a beautiful trading range. Remember from earlier in the course, a trading range is when we have a sideways movement. And one thing that is very beautiful about this chart is that what you can see here, what happened? Well, you can see that right here, the price actually broke below the support. So this is one bearish sign that we might consider shorting this market or bet that the market will go down. At the same time, we had this strong bearish reading on the MACD. This suggests that we can look out for the next pullback. And then right here, you can see that the next pullback actually came in and we touched the previous support that now has flipped to become resistance. So this was yet another sign that this might be a good shorting opportunity. So we basically had three bearish things happening at the same time. This made this a good short, and after all of these signs we can see that the price completely collapsed here to the downside. So this is basically how I use pivot points. I like to use them to find some of the most important support and resistance levels. You can, for example, see if we zoom out a bit here, you can actually see that we had some previous resistance coming in right here, right? The price broke this resistance and then it flipped to become support, and so on and so on. You will realize that many times these pivot points will be significant market structure levels. Alright guys, so now we're ready to take a look at our third indicator. And for this indicator, I have actually changed the chart here. So now we're looking at Bitcoin and we are on the daily time frame. So we're looking at Bitcoin on the daily. And to open up the indicator, we once again want to head up here to the indicators tab. And now you want to search for volume. And when it comes to volume, we actually have tons of indicators, both different indicators created by TradingView, but also many community-built volume indicators. But for this video, I want to keep it very simple and just open up the normal volume indicator. So as you can see, when we open up the volume, let's actually zoom in a bit here. You can see that multiple bars will appear here below the price. So for every single candlestick, you will see that we have a volume bar. So for example, for this green candle, you can see that we have a very tall volume bar. And for example, for this red candle right here, right, you can see that we have a very tiny volume bar. And as I briefly mentioned, volume basically measures how much crypto that was traded during that specific candle. Or in other words, when we're looking at Bitcoin on the daily time frame, this is how many Bitcoins were traded during that day. So for example, during this day right here, we can see that we had lots and lots of trading activity. So many Bitcoins were traded. And this actually indicates that the move is more significant and much more important compared to, for example, this tiny move right here that also had very little volume. In general, you can think about volume as the more volume, the more important the move. And now we might ask ourselves, why was so much volume traded during that specific day? Well, to understand this, it can be useful to look at the previous market structure. Did something special happen during that specific day? Well, here we can start to notice something very, very interesting. You can see at this level, remember, we still have the pivot points here on the chart. You can see that here we have a zone with multiple pivot points, right? You can see we not only have 1, 2, 3, but pretty much four pivot points at around the same level. And what actually happened during this day where we saw a spike in volume? Well, not surprisingly, this was exactly the day where we broke above the resistance, right? This was the exact day. So here we broke about a very important level, and we also had lots of volume. So this makes the move even more important. So we have two strong factors indicating that this was a very strong move. And let's look, guys, what happened after this move. Well, the price just entered a very, very sharp and strong move here towards the upside, pretty much pumping around $30,000. All right, guys, so this video is actually coming to an end very soon. But before we wrap up, I want to thank you all so much for watching. I also want to give a big thank you to all our channel members. You guys are the official sponsor of this channel. So if you want to support the channel while at the same time getting access to exclusive videos, priority replies, emojis, and all that good stuff, don't hesitate to become a channel member by clicking join below this video or on the channel page. And guys, when you are ready to continue your trading journey, I highly recommend all of you to check out the playlist right here. I hope I will see you guys in another video. Take care. Ciao, ciao.